risk management, the basics, what
everything.
inducement is, everything, mitigation, all that shit. Because I know you lot are beginners still, but bro.
Yes.
It's gonna be a good day. I'll make sure you guys just get a notebook, a pen, or paper, anything to write a note down, so you guys can memorize it. And yeah, man, let's get started.
Yeah. So before we start, I want you guys to please get a note. If you have a question, please type in the group, and then Meldon will alert me because I'll be on the chat, so I wouldn't be able to see if there is a
Yep.
message in the group or something. So you chat in the group, you type your question in the group. If your question is too long, you can just unmute yourself and then ask, like prompt me that you want to ask a question, and then
We hear 102 people, I think. Yep. Yes, sir. Indeed, man. Actually crazy, bro. Think about it.
yeah.
Yesterday we were like 67 people. Now it's 102 people.
All right.
Yes.
So
Actually,
let's get started.
are you gonna share a
Oh,
screen, bro?
yeah, I'm going to share my screen.
Sounds good, man. I'm just gonna mute myself, bro. You can talk in it the whole time.
All right.
Alright, man.
Okay, the long-awaited time is here. All right. Thank you guys for coming, like joining. We know you have important things, but then you just created time for this particular event to happen. So yes, smart money concept. So before we start, let's do some small quizzes. So what trend is this? What trend is this? And what trend is this?
Bullet.
Good. So we are bullish here, we are bearish here. Easy.
Yeah.
It is very easy for you to identify these
Hold on.
trends.
Oh, to make it easier for you, yeah. Tell them to just type 1 or 2 in the chat, man. Just be like, if you
Yeah.
think it's bullish, type 1. If you think it's bearish,
Okay,
type
okay.
2.
Yeah, yeah,
That's
yeah.
easier, isn't it?
We are going to do that.
Alright, cool.
Now, the next thing is once we have a break of structure, expect price to pull back into extreme zones. After a break of structure, you expect price to pull back into extreme zones. Now, in the process of this pullback happening, it forms or build a lot of liquidity along the line to help this impulsive move to happen again. After a break of structure again, a pullback happens. And when that pullback is happening, it causes a complex pullback. So now, what happens is that during this complex pullback, a lot of liquidity is being built during that complex pullback to facilitate this impulsive move to the upside again. So a break of structure, complex pullback, break of structure, complex pullback. If you understand that, type 1. If you don't understand it, type 2. We'll go over again. As I said, we are not ending this section until everyone here understands what we are teaching today. So if you understand it, type 1. If you don't, type 2. Meldon, you check
All
it for
once,
me.
bro.
All
All
ones.
once.
Okay. Let's continue. So
Yep.
now, how do I get to know if I'm having a complex pullback or I'm having just a pullback? Because there is a difference between this and this. You get it? This is just a pullback, but this is a complex pullback. And also, the complex pullbacks take a very long period of time to happen than the impulsive move. So let's label our chart. This is our impulsive move. Or impulsive or main push. That's our impulsive or main push. This is our complex pullback. This is our complex pullback. And now there is one last thing that I have to teach you guys, what we call the efficiency of the pullback. Now, before price or before the next impulsive move comes in, what we have to do is we have to get something called the efficiency. There have to be an internal break of structure, a pullback into extreme zones before that gives us a confirmation that we are having what? Another impulsive move coming. So before the impulsive move, we have to get a complex efficiency of the pullback. So the efficiency tells us that the pullback is done, and so we are about to have another impulsive move. So one is for main push, two is for complex pullback, and three is for the efficiency of the pullback. So it's a cycle. So the first, the second, and the third forms a closed loop, because first proceed to form two, two proceed to form three, three moves back to one, and the cycle continues there and then. So after a main push or after a break of structure, you expect what? A complex pullback, which is number two. After a complex pullback, we have the efficiency of the pullback. After efficiency of the pullback, we have a main push. So main push, complex pullback. After complex pullback, efficiency of it, main push. So that is the market structure cycle that we are going to deal with. If you understand, press 1. If you don't, press 2.
Press 1.
Melvin, update me.
Oh, once again, my bro. Keep
Okay,
going.
so let's continue.
Alright, bro.
So once you understand this, I'll give a case study. And then with the case study, we'll determine if we are at one of the structure, we are two, or we are phase three. Now let's go down. Okay. So this is case one. This is case two. This is case three. So guys, case one, are we at phase one, phase two, or phase three? If we at okay, case one, if we at phase one, type one. If we at phase two, type two. If you at phase three, type three in the chat.
Bro, I'm seeing a lot of twos, bro.
A lot of twos. Okay. Did
Yep.
anyone choose one or three?
Nah, so far no one.
Good. So yes, the right answer is phase two. We are having a complex pullback. All right. I like the way the class is going. So case two. Let's go to this case. Are we at phase one, phase two, or phase three? Phase one, phase two, or phase three?
People are saying one.
Exactly. So we are at phase one. We are still at the main push. All right. And the last case, are we at phase one, phase two, or phase three?
Three, bro.
All right. Classic.
Someone said all.
Someone said what?
All, bro.
Oh,
I think one, two, and three.
we just have one, two, and three. So
That's what someone said, bro.
good. So we are at phase three. Okay. Okay. So case
Okay.
four. Are we at 1, 2, or 3?
Oh, I'm seeing ones.
All answers are ones.
I'm seeing a lot of ones.
Classic. You guys are very fast. So yes, this is just a what? A normal pullback. It is very simple for you to identify this with drawings. But when it gets to the charts, that is where the main problem is. So you understand this, right? If you understand this, type 1. If you don't, type 2.
Yes. 1-1.
Easy.
So many ones, bro. Someone says 69. Someone says sources. Oh, that's crazy.
Alright, I like the energy. So, deleting this, we go into the chart. Now, this is our swing points here. So, per the swing points that I have drawn here, are we at phase 1, phase 2, or phase 3? I know the uncertainty will start setting up here. Mm-hmm.
I've got 5 or 4 ones here, and someone said 2.
All right. So the person who said 2 is right. We are about to have the complex pullback. So let me explain that. As I said,
Yeah.
it's going to be technical when it comes to the main chart, and it's going to be simple when it comes to drawings. So let's go back to our drawings. Let's try to figure it out. Then we come back to our charts. As I said, we are not closing this section until everyone understands this. So now we have this. Now, whilst we're forming this push, this main push, remember we would have internal structures forming in the charts. So we have this internal structure forming in between the charts. Now, along the line, this will be our internal what? Higher low, and this will be our internal higher high. At any point in time, if this breaks this, that is when you get to know that our complex pullback is about to begin. Are you guys getting it? Once you get an internal break of structure after a BOS, it should tell you that the complex pullback is about to what? Begin. Do you guys get it? If you get it, press 1. If you get it, if you don't, press 2. Melden.
Hold on, bro. I'm just waiting on it. So far, I've got 2 ones. Hold on. Can you explain again, please? Someone said, can you explain again?
All right. So, as I'm saying, when price is going up, internally it forms highs and lows. But we are not going to watch those highs and lows. We are watching the swing points. Here and here is the swing point. But within this swing point or within this main push here, we have internal highs and lows. So you see high, low, high, low, high, low, high, low, high, low. Then this main push here again, high. Do you get it? So before we get to know if
Hold on.
okay,
Someone said, where do you find the break-off structure?
internal break of structure, right?
Yep.
Good. So you find the internal break of structure within the internal structures. So you have your main push, but this main push, price doesn't go up just like that. When it's going up, it forms what? This small highs and lows until it gets to the highest point. Then we will have a quick reverse. So this is our swing points, and this will be our reversal. But when it's reversing, it first of all breaks internal structure first, then it gives us a confirmation that it is about to have this complex pullback. Once the complex pullback is done, price what? Shifts internally again. So when price is about to start, it will give you a notification. When price is about to end, it will give you a notification. And then the ending notification is what we term as the efficiency of the pullback. Are you guys getting it? If you get it, 1. If you don't, type 2. It's about to be a long day.
Yep, I'm seeing the lower ones.
All right, good. So with this diagram here, or with this chart that we are having here, you realize that, let me delete these drawings first. With this main push that we are having here, you realize that we had this what? Higher high, internally higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, higher high, then lower low. Do you get it now? Now, before we continue, so the question is, are we at phase 1, phase 2, or phase 3? Because we've had a shift here. Are we at phase 1, phase 2, or phase 3? If you're at phase 1, type 1. If you're at phase 2, type 2. If you're at phase 3, type 3.
Yeah, I'm seeing multiple 2s, and someone said 1. Just one person said 1.
So the person who said 1, I'm going to explain again for you.
Fire.
Please, no trolls, because I know we will probably get someone who will be taking the opposite side of whatever just to slow the pace. So please, no trolls. But if you don't understand, you can clearly type 1 and then we'll go over again. So let's continue. So as I was saying, before price starts going down, it has to give a confirmation. And the confirmation is what we are talking about, internal break of structure. So you are going up. Then once you get this internal break of structure, it confirms that we are about to have what? A complex pullback. Do you get it? If you get it, press 1. If you don't, press 2.
Yep, you got it now, bro.
Now, once you get that confirmation, as a smart money trader, you are not going to sit there for price to get to your extreme before you enter a trade. You can capitalize on this downward sell into your extreme zone. When it gets to your extreme zone, you wait for the break of structure, you take the main push, and the trend continues. Are you guys with me? If you get it, 1. If you don't, 2.
Yes, sir.
All right. So at this phase, we are at what? We've had internal break of structure, so we're at phase 2, right? Now the cycle continues. After a break of structure, what do you expect?
Hold on, bro.
Okay.
Someone needs to mute himself. I don't know who, but someone needs to mute, bro. I think it's Hussein. Hussein, can you please mute yourself, bro? Hussein. Brother's not even talking.
All right.
Yo, buddy. Wait, how do I mute someone? Oh, I can mute someone. Yeah, cool. Alright, keep going, bro.
Okay. So let's continue. So as I'm saying, once we've had this internal break of structure, it confirms to us that price is what? About what? Starts the complex pullback into extreme zones. Do you get it? Now, market doesn't work to the perfection. If market works to the perfection, any random guy can make $1 million from the market by just pressing a buy or a sell. Any random guy can just. So what market does is, markets sometimes give a fake move or an insufficient move. So look at something. Just before the real move happens, there is a fake move. Just before the real move happens, there is a fake move. So you realize that just before price shots this upwards, price broke structure internally here. So look at this. When price got to this level, you see, with us, we deal with wicks, we don't deal with bodies. Price wicked below this, right? So any random person or any new trader will think we've had a break of structure, and so he will start looking for sells. Once you do that, the market will just sweep you out. Once it sweeps you out, the main trend what? Go ahead. Are you guys with me? So always wait for the body to close below the wick. Don't just use wick. If you use wick, a wick is also a break of structure, but the body gives full confirmation of that break of structure. So always wait for the body to close below the wick before you confirm break of structure.
Brother, your voice is breaking up, man.
Can you guys hear me? If you can hear me, type 1. If you can't,
Your
type
voice
2.
is breaking up, bro.
Can you guys hear me?
Oh my dude, it's bad, man.
Maybe it's from you because I'm seeing ones in the group.
Hold on. Yeah, people are saying one now.
If you can hear
Yeah,
me
now it's
correctly,
clear.
okay, okay,
Hold on, someone's got a question.
all right.
Someone said, should we wait for the high time frame internal break of structure to avoid fake outs?
Should we wait for internal break of? Ask the question again.
Someone said, should we wait for a high time frame internal break of structure to avoid fake outs?
Okay, so the thing is, you will start your top-down analysis from the daily. So whatever the daily is giving you, that is what you are going to pipe down to the smaller time frame to trade. So on the daily, if you see a wick breakout, wait for a proper body breakout before you look into whatever you want to trade. A wick breakout is not a clear identification of a break of structure unless you have a body breakout. Do you get it now? If you get it, 1. If you don't, 2. Can I continue?
Yeah. Some
All right,
little ones.
good. So now we have a break of structure. Now the cycle again. After a break of structure, what do you expect? So now we are dealing with only this part because we know what price is about to have a complex pullback, right? So we are dealing with only this part. Only this part because
Hold on, bro. Someone said, can you repeat please?
after a break of structure, what do you expect? I think I should write this here so that everybody will have it in mind.
Yeah. Yep.
BOS is for break of
Nah, it's
structure.
the fact your voice not breaking up, bro.
Yeah.
It's the fact your voice started breaking out, yeah, and someone didn't get what you said.
Okay. So I'm saying that after a break
But
of
it's cool now,
structure,
bro.
can you guys hear me now? Can you guys hear me? Hello.
Yeah.
Yeah, everyone is hearing me.
There's a question for you, bro.
Okay. Go ahead. Go
Phase
ahead.
one completed now. Is it time for phase two, meaning pullback?
Yes. So listen, that what we are coming to learn today is just a repeated cycle. Even on the 1 minute, the same cycle happens there. Even on the range markets, the same thing. Even on the monthly, the same thing. Yearly, the same thing. So please understand the cycle. After BOS, look for what? Complex pullback. After complex pullback, look for efficiency of the complex pullback. So now, our first thing is we've identified that we are coming to have a complex pullback. into extreme zones. That's our first point. Now, the next thing is we know that after a break of structure, what will we get? Another complex pullback, right? So now that we are investigating this side alone, we can look for a complex pullback into our new supply zone that we'll be finding here. Now, it comes to the next question. How do I identify a supply or demand zone? Now, let's go back to our drawings. We have this. We have this. And we have this. Is case 1 and case 2 the same? If you think case 1 and case 2 are the same, type 1. If you think case 1 and case 2 is not the same, type 2. So this is case 1. Study the diagram more before you answer.
I'm saying multiple different answers with 1 and 2s.
Okay, so
Majority is 2.
Alright, so they are not the same. In this case, you realize that case 1, after a break of structure, case 1 moved towards extreme demand zone before going up. But case 2 moved halfway before going up. This is our extreme. This is halfway. So yes, as I was saying, if market is to move very perfectly, any random guy can read the market and make millions of money from the market. So the market will never behave perfect for you to what? Capitalize on that. So now, let's continue. That is why there is a saying that the market is not for the dumb one, it's for the smart one. And that is why we are smart money traders. You have to be the smart one. You don't have to be the dumb one. Let's continue. So on a higher time frame, it will be very difficult. Okay, before that, let me make this analogy. The price of an iPhone 16 comes. Let me make this theory before we move on. Here we have $1,000. Here we have $2. Here we have $0. Here we have $1,000. And here we have $500. Or let's say $500. And then here we have $1,200. So guys, let me ask you a question. Do you think price of iPhone 16 will push to $1,000, and then if they realize that people are not buying it, they will push the price of iPhone 16 to $2 before they move it to $1,002? Do you think this is ever going to happen? If you think it will happen, type 1. If you think it will not happen, type 2.
No, bro.
Good. There is no way the price of iPhone 16 will move from $1,000 to $2 before it goes to $1,200. In the same way, look at from, let's say, $0 to $1,000. There's a probability that it will reduce because, let's say, we realize that a lot of people are not purchasing the iPhone 16 again. What will happen? They will have to reduce the price of the iPhone, but that price that they are reducing will never go to the zero zone or will never go to those single zones. That's for the higher time frame. That's for the higher products. Do you guys get it? That is why you're supposed to know the type of currency that you are trading. because there are some currencies that it will go to 1,000, come back to 2, go up to 1,200. But there are some currencies that will start from 0, go to 1,000, will never come to 0 unless there is a break of structure or a change in trend. Will come to what? 500 and go to 1,200. Will never come back to 500. Will come to 1,000, let's say 1,000 again, and then move to 1,600. Do you get it? So price would some way, somehow take it very expensive to come back to 0 unless there is a change in trend. If you get this scenario, type 1. If you don't, type 2, please.
One.
All right, so let's continue. So now it is our duty to determine two zones. One, the 50% zone, and two, the what? The extreme zone. So the 50% zone will be our what? Our decisional zone, and the extreme zone will be the extreme zone. Do you get it? So on the daily, we'll look for two zones because the daily is it will need a high amount of money to come to this extreme end. But then it will take it very easy for it to get to the below the 50% before it pushes up. So because it believes that below the 50% is a fair price before price pushes up. Guys, do you get this?
Bro, they need more examples so they can understand it.
Alright, so let's continue. Where okay, look at something. Let me clean the drawings. We are going to the live chat. So now let me use the replay button. So we have this break of structure here. You would wait for a break of structure. So now wait, we have this break of structure, right? You guys can clearly see it. We have a break of structure. But remember, it's what's break of structure? Weak break of structure. But then, as I said, a weak break of structure is also a break of structure. But body always confirms it. Let's continue. Now we've had a break of structure. So we are expecting a pullback into where? As I said, daily. So it should give you at least a 50% zone. It should at least come to this zone, below the 50% zone, before price what go ahead, because we are dealing with money and it will take a very huge amount of money for price to come to this extreme zone here. But depending on the pair that you are trading, price will come to the extreme. But sometimes price will not come to the extreme. Price will just come below the zone here, the 50% zone here. Now I'll show you how to identify which zone is correct below the 50%. We'll get there. But I just picked all the range here just so you could understand what I'm talking about. So below the 50%, any zone here qualifies to be what? A demand zone to look for what? Buys from. And also we have this extreme zone. So I'll delete this and I'll wait for you to see the way price will react to our zones. Now remember, when price gets to our zone, we'll continue to investigate on the lower time frame. We'll get there. So let's see how price will react to those zones. You see the way price reacted from the zone here, the range zone here. If we are even wrong, we would catch about 1:15 RR from this trade, because from here to here alone is 179 pips, and we can capitalize on that even if we are wrong. Now see, after that, price, do you see what price did over there? Price initially gave us a break and now dipped to liquidate that and pushed up. I'll show you these things when we get to the lower time frames. Always the first touch of the demand zones are fake touches. And so you wait for price to come and liquidate those touches, and then you take the trade from there. But then we'll be learning about these things on the lower time frame. So there's no need for you to start asking questions about these liquidations. We are dealing with market structure for now. So now we had this push to the upside. Now it confirms to us that this zone is not going to work again because we have a new high formed. So now you realize that price didn't come to our extreme. So if you were waiting for the extreme, you would have missed the trade to the upside. But once you have a decisional zone, you were able to what? Catch the trade to the upside. Now, if you understand this, type 1. If you don't, type 2. Melvin updates me.
Once.
Easy, easy, easy. All right, so let's continue. Now that we are able to identify these
Hold on.
zones.
I just got
Okay,
1, 2, bro. Someone said it, but I have a doubt.
okay. Let him ask a question. Ask your question. You can unmute if you think the question is too long to type.
Yeah, bro. If you actually want to type it, you can type it. How to mark the daily lows and highs?
Okay. How to mark the daily lows and highs. Okay, so let's do this. As I said, we have swings and we have what? We have swing structures and we have what's the name? Internal structures. Good. So we wouldn't go too far. We can decide to go too far and then zoom out, blah blah blah. You realize that we are bullish. Like the overall trend is bullish, right? So now what we do is we just zoom out to a sufficient period of time that we can think about where clear highs and lows were broken. So you realize that we came from this side, we had this, we had this. Do you get it? So this is our swing, higher high, this is our higher low. This went ahead to break this, so this becomes our higher high, move to extreme, higher low, goes ahead to break higher high, comes to this higher low. So now let me use the replay button to explain to you. So we had this, let me use it here. We had this high and low here. Now this was the lowest pullback this move have it happened from here. I don't want to go extremely back, otherwise you forget. Now this and this is our range. So anything that happens in between this range is just market structure. And you understand this why this market structure is happening. That is what we call the complex pullback. So after a break of structure, a complex pullback. Now the end of that complex pullback, where the efficiency of the pullback happens, that is where will be our new higher low when price goes ahead to break the top. So now we have this break of structure. If you watch from the FI, we have this break of structure. It will pull back into extreme again after a break of structure, complex pullback, so into extreme. Then it will push again to break structure. Then it will have a complex pullback into extreme. Then it will push again. So let me just forward this to 10 and let's have the replay. So to extreme, goes ahead towards break structure. Okay. Okay, so we've had a break of structure again. So pull back into extreme. Another break of structure. You see, After this break of structure, you see price was not giving us a major pullback. It was just giving us a normal pullback. So this one, are we at phase 1, phase 2, or phase 3? Phase 1, phase 2, or phase 3, guys?
111.
Alright. So now, you see, now we had a
Major
pullback.
pullback. Will it at least be 50%, right?
Yes, at least be between 50%, yes. So now, you
Okay.
realize that this push went all the way to the upside. And we never had a clear what? Pullback until now that price is deciding to have a clear pullback. And then the question is, how do I get to know if price is about to have a clear pullback? And as I was saying, the internal will shift bearish. So you realize this was the last internal higher low that went all the way up here to form a higher high. So now that we have that internal break of structure, what do we expect again? Price should have what? A pullback into these zones, a pullback into anywhere here, and then sell into either 50% or what? Extreme. Are you guys getting it? If you get it, type 1. If you don't, type 2.
What's in the chat, bro?
Easy. So let's continue. So now what you have to do is take your Fibonacci. Since you've had an internal break of structure, confirms to you that the complex pullback is about to begin. Now take a Fibonacci.
Okay.
Mark from the
Someone
lowest.
said I get, bro.
Someone.
Someone said I get it, but still don't get it. How to mark them?
Oh fuck. Sorry. Oh yeah, so
That's kind of
this is the
messed up,
first
bro.
time. So it would take a very like to take practice in order to do it. So that is why we are in the channel. If you are marking it, you are having problems, just put so Melvin, create an extra channel for questions. Like
All right, cool,
questions.
cool.
Yes. So that when you have a question or when you have a doubt, when you are marking your structures, you can put it there and we'll attend to you. Okay. All right.
Someone said show your fib settings.
Oh, okay. Just these 0, 1s, and 0.5.
Yeah, you guys easily get a screenshot, bro.
Uh,
Try to get a screenshot, just copy it.
okay. It's just 0, 1, and 0.5. That's all. So we are looking for zones below the 50% as our decisional zone. Decisional zone. Sorry. As our decisional zones. Do you guys get it? All right. So now here comes the here comes another question. Which of these zones are correct for me to mark my demand at? Because this is a sharp move and this is also another move. Because we have two zones here. We have this lower, a higher low, higher high, higher low, higher high. So zone this and this qualifies. So let's use this analogy. We are guys, we have our specifications for the type of lady that we want, right? So some of us want a big body girl with who is a fair colored, like a big body girl who is fair in complexion. Someone also wants a slim lady who is dark in
Hey,
complexion.
yo, what the hell? What are you
Guy,
talking about?
I want you guys to get the analogy here. So now your specs is to get, let's say mine is to get a body girl who is fair. That is my specs. Maybe yours is a body girl who is dark. So price has a specification. Within this 50%, price can choose to respect this zone or that zone here. Any of these two zones work for our decisional demand. But we will have to investigate because price or these demands have requirements, and the two requirements is should have an engulfing candle and also an imbalance, or what some people term as a fair value gap. So one, you'd identify that, okay, I want a big body girl. That is, we are deciding that we would never take any demand or supply above the 50. So since I want a batty girl who is fair, I would never take a slim girl who is above this 50%. But I'll take a batty fair girl who is below the 50%. So that is our first specification. We are picking below the 50%. So we are picking fair batty girls. Okay, once we pick a fair batty girl, we have two choices. We have two fair batty girls. Now we have to check within these two fair batty girls, which of these two fair batty girls meet our requirements. So our requirements are, once you are fair and you are batty, you should be loving and caring. That is our two requirements. But you would never see someone for the first time and realize the person is what fair and requirement, unless you start having what a conversation with that person. So that conversation is what we are investigating here on the chart to see if these two fair batty girls meet our minimum requirements, that is loving and caring. Are you guys getting the analogy? If you get it, type 1. If you don't, type 2.
Yeah, man.
You are getting it, right?
People are laughing.
Okay, so let's continue. So now
Someone
that
said 2.
okay, he should unmute himself or he should type his question.
Bro, yeah, just type a question, bro. But first and foremost, explain what imbalance is.
For imbalance and fair value gap, we'll get there. Okay, we are talking about you understanding that these two fair batty girls qualified to be our girlfriend.
This call's going to be a long call, man. 15 minutes already.
Because you still don't understand structure. So we can't continue to liquidity.
Yeah. Can you summarize what you just explained, please?
He said, can I summarize what decision is?
That's what someone said. Can you summarize what you just explained?
All right, so I'm just trying to say that price can never go down all the way to price can go down, but then sometimes price would never go down to the extreme. It will just react from below the 50% zone and push up. But below the 50% zone, we have two demand zones that price can react from. So we have to investigate these two demand zones to see the one that best fits price to react from. That's all. That's the summary.
Does that make sense, bro?
If it makes sense, type 1. If it doesn't, type 2, please. We have to wrap up because we are having, it's almost 50 minutes and we are still at market structure and we are still at daily.
And then he said once, bro. Thank you, once. Yep,
let's
perfect. Bro.
continue. So now we'll investigate these two zones here, this and that, because those two give us a clear structure. Now the question is, someone was asking what an imbalance is. An imbalance is, let's say we have this candlestick here. Let's say we have this sell candlestick here, another candlestick here, and then this last candlestick here. And then the wicks of the preceding ones leave a space between them. The wicks of the first and the third candle leaves a space. In actual sense, it's supposed to intercept themselves like this. So once they intercept, you see there is no space between this body candle here. But once it closes like this, and this close somewhere like this space here is what we term as the fair value gap or the imbalance. This is what we term as the imbalance. Do you guys get it? Do you guys get it?
Hold on, I'm just waiting on it, bro.
All
People are not typing. I just got 2 answers, bro. Go on,
Okay.
man. I need more, fam. Keep going. 3 so far.
So let me explain it again. As
Nah, they got it. They got it, bro.
they got it. Okay, sure. So now you get
Yep.
imbalance. What imbalance is? So now we should get a form of imbalance at that area. We should get an engulfing at that area. So these are the 2 requirements. So now let's investigate this particular zone here. So now we would look at the last 2 bearish candlesticks before price went up as an area for investigation. So all this candle still qualifies, this qualifies, all these qualifies. So now let's see if any of them meets the 2 requirements. So now this bearish candlestick, does the next candlestick engulf it? If it engulfs it, type 1. If it doesn't, type 2. This black candlestick, does this engulf this? Remember, your engulfing should be the opposite color because you are looking for bullish. So you look for bullish engulfings, not bearish engulfings. So does this engulfing engulf this in the opposite direction?
1-1.
All right, good. But then remember, this is a black candlestick. And then, so this is not an engulfing, it just continues the trend. This is not an engulfing. But this candle blue here engulfs the black one. Do you get it? If you get it, type 1. If you don't, type 2.
I'm seeing once again.
Okay.
Yo,
About me yourself, dummy.
Dubs.
what you saying? What you saying?
Let's continue, guys. So we will look for one candlestick that engulfs the other one, and then after engulfing, it has a fair value gap right above it. So you realize that this particular candlestick here engulfed this one, but the next candlestick didn't form an imbalance next to it, right? So that doesn't qualify. The black candlestick, this couldn't engulf this, right? So we move on to the next candlestick. Did this engulf this? No. So you move to the next one. Did this engulf this? No. So you move to the next one. Now this engulfed this and have what? An imbalance. This is the imbalance that we are talking about. So this candle here engulfed this candle here, engulfed this, and went ahead to form an imbalance. The imbalance we are talking about is the space between the 2 candles here. This imbalance here, or the fair value gap there, that is what we are seeing an imbalance. So in this case, when you are marking your decisional demand zone, it will be from the candlestick, this candlestick here, the wick of that, to the lowest part of that swing low, which is here, and we'll mark it to the very right side of us. So from the top of that candlestick that qualified to the last point of that swing low, that is where our decisional demand is going to be. Now we found one. Let's check if the other one too gives us what? Gives us or meets those two requirements. So we found these 1 and 2. You realize that this one also tested into that demand zone and then pushed up. So we can also investigate these ones too. I realize that this candlestick didn't get engulfed by this, 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 but this engulfed this and formed a fair value gap, a small fair value gap there. So we've had two what decisional demand zones within that same area like this. So what we have to do is we'll just delete this and then extend this into this. It is huge, but then we'll try to refine it on the lower time frame, so don't worry. If you get it, type 1. If you don't, type 2.
All once again.
Easy, easy. So now we are done with daily time frame. So we've identified our decisional demand zone. Identification of the extreme is very simple, but it has to also meet the two requirements. So does this engulf this? No. So we move to the next one. Does this engulf this? No. Does this engulf this? Yes. Does it have an imbalance? Yes. We have a small imbalance there. No, we don't have an imbalance. It closed. So we'll check the next one. Does this engulf this? No. Does this engulf this? Yes, but it's in the opposite direction. We don't want that. Does this engulf this? No. Does this engulf this? Yes. Does it have an imbalance? Yes. So it will be this to the extreme end of that to the right side. Are you guys getting the scenario? So these two are two decisional demand zones. If you get it, type 1. If you don't, type 2. So this is our decisional zone and this is our extreme. But as I said, price is very expensive sometimes to move into these extreme zones. So normally the decisional zones are respected. So if I'm to play, realize that, oh, so price is not there yet. Okay. So now let's continue from here. Now guys, we are about to take advantage of this trend. As I said earlier, after a break of structure, what do you expect? A complex pullback, right? To where? Extreme zones. Now, since this is an internal break of structure, we would expect a pullback into our extreme zone. So now, since this one engulfed and this blue candle was engulfed by this, but didn't form a what? An imbalance. But you realize that this black candle here got engulfed by this and formed an imbalance. So this long body here or this long candlestick here will be what our demand will be, like our supply will be, sorry, will be what our supply will be. Now, since this is on the daily, we will move to the 4-hour to try to refine our supply zone. So the same requirements. Now guys, once you move to your 4-hour, what you have to do is refine the demand zone to the lowest point again that meets the requirements. What are the requirements? Engulfing and what? Imbalance. So this part is the lowest. You realize that this candle here, was engulfed by this and created an imbalance. So that will be where our decisional demand will be. Do you guys get it? Now we would have to refine our decisional, we will have to refine our extreme supply. Now you realize that after this bullish candlestick, this one was not able to engulf it. But this candle engulfed this black one and created an imbalance to the extreme end here.
Bro, people having questions.
Okay.
First one, in extreme zone, we mark red candle or also just green candle.
The difference between the red candle and the blue candle is that the blue is for demand, the red is for supply. You can mark extreme. This is extreme. This is extreme. This is decisional. But they are all places for finding buys. That's why we made it blue. We will find buys here. But since we've had a break of structure internally, we expect a pullback into this extreme supply to look for sales into demand. If you get it, type 1. If you don't, type 2.
And the second one is, but there was no fair value gap, right?
Where?
But that was a fair value gap, bro.
Where?
Oh, in 4 hour, in 4 hour.
There was a fair value gap here.
You said demand zone. Can you
Yes,
like zoom it? Can you
this
zoom
is a
in?
demand zone. He wants to see it.
It was
This is
mitigated, no?
Oh no, it doesn't care. It doesn't matter.
Can you show the fucking, what do you call it? The fair value gap, please. Just mark it, bro. Just put like a circle on it.
Let me use the ellipse.
Alright, cool.
Where's the ellipse? Where's the ellipse? All right. Can he see it now?
You said, okay, but do you not have to look for a fair value gap after engulfing candle?
Yeah, so this
Bro,
engulfed
that's
this.
literally engulf, but never give a wick back, bro. So that's, you
So
count it as
still there
a,
is a space.
you know,
So
fair value
once
gap.
there's a space, there's a fair value gap.
Do you get it now, bro? It's clearly a zone, never give a wick pullback. Space equals gap, exactly, bro.
Does he get
Yep,
it
you
now?
understand it now, man.
Okay, so let's
Yep.
continue. So now, as I was saying, where is it? Where is it? Where is it? Weekly, but now, guys, once you get a break of structure, you expect a pullback into extreme zones. But remember this, we had our zone on the daily time frame, and it was what from here. What was the candle that qualified? The last one with the wick, big wick. So it was from here to here. So the more you refine these zones, the more likely you are to miss a trade, because price can just come here and then start going down. Sometimes the price can just move all the way to this side and come down. So you don't know how, or you don't know where price would actually reverse from. So when you are refining your zones, just know the side effects to that. So yes, but then it is good to refine your zones, especially when you have these imbalances above. So what you do is, right now we know we are what? We are bullish overall, but we are turning bearish to move into this extreme what? Decisional demand zone. So what we'll do is we'll move to our 15 minutes. That is where we'll enter the trades. So what we'll do here is, on the 15 minutes, we'll try to identify the trend there. You realize that price was forming, this high was formed. Eventually, price broke that higher high to form another here. Was a This was a higher low, this was a higher high. This push here broke structure. So this becomes a lower high. This becomes our lower low. price move all the way to this side to form our higher lower high, then price didn't break structure here, formed an equal low, went up to break structure here. So this becomes our our lower low, price goes up, lower high. Now price is here. So now this and that becomes our swing point. Do you guys get it? If you get it, type 1. If you don't, type 2. Oh, do they
One,
get
bro.
it? Okay, 1. Let's continue. Let me move to the 4 hour and then clear some things up. Alright. So we play. Okay. So now we move to the 15 minutes and we are having this. So this now within this, after a break of structure, what do you expect price to do? Price should what? Have a complex pullback. So as I said, we are just going to play with these things. Complex pullback into an extreme supply zones. So let's say this is our supply zone. Remember, we'll investigate on this supply zone. So let's look if we get a supply zone that meets our requirements. This got engulfed by this, but didn't form an imbalance. This didn't get engulfed. This didn't get engulfed. Okay, this engulfed this, and then has an imbalance. So we'll mark from this lowest point to the highest point, and then here. Yes. So what we are going to do is we can decide to take, as a new trader or as a beginner, what you have to do is just take the A plus trades. Don't take counter trades. So the A plus trade is to wait for price to get into this zone. Do your investigation. I'll show you how to do the investigation. Do your investigation and sell to the downside. But also, traders like the top guys who have learned and then have enough experience in the market can mark this internal higher low and then wait for a shift in market structure, retest, and trade into this demand, this supply, sorry. So wait for price to break. So now we have a break of structure here with the bodies above. We have a break of structure, so we'll look for a demand zone below, and this is one of the demand zones I'm seeing. And then we wait for price to get there, then we move to the lower time frame to investigate. Now price didn't come there, price went ahead to break another structure. So now break of structure, pull back. But look at something. As I said, you have decisional and what? Complex. So look at this. Realize that price went to our what? Price never got to our 50%. So we are not wrong. We'll still wait. But then this becomes the new swing point internally. This here and what is going up until we have a reversal. Good. So now we've had what? Once we had a break of structure, our demand will be around this side, and then would investigate. Once we had a break of structure here, our demand here, investigate this. So we'll go to the 5 minutes, look for a break of structure there, and take the trade. Now, is someone having a question? Okay,
Nah, bro.
let's continue. So now, Let's go to 1 minute because there is no clear leg over there. Good. So we have something like this here. All right. So now, always, if you have a straight leg into your demand, this is what you do. As I said, the first leg is always what? The first touch into the demand is always what? Liquidity. So once you get the first leg, please and please wait for price to come there again and liquidate the first candle that will broke structure. Do you get it? Wait for price to come inside again to break structure. Now, the aggressive trader, after the break of structure, if you get a bullish engulfing candle, just take the trade from there and your stops will be below. And then, as usual, target your 1:3 first, take partials, and let the trade run. So we would have taken
Bro,
our.
someone asked, do we only mark extreme zones on 15 minutes time frame?
You see, on the 15 minutes, we realized that yes, extreme zones on the 15 minutes, yes.
And he also said, do we mark zones according to engulfing or fair value gaps in 15 minutes also? Or don't? We don't.
The two rules should meet. The two requirements should meet.
Okay.
Not one before the other. The two of them should meet. Now, you see, we've had this 1:3. This is an aggressive entry. So let's wait for the normal entry. So the normal entry is when you have this break of structure here. You have this break of structure here. You wait for a pullback, but sometimes you don't get the full pullback. So you measure from here to here so that you don't miss the trade 50%. You look to set your limits here within any level here. Your stops right below here. Target 1:3. First, 1:3, you take partials. So we wait for the trade to get mitigated. We tapped in. Remember, this trade is also running. Oh, we've taken partials from there. This trade is also running. All right. So now we lose this trade here. That's fair. And then with this trade, we took 50% out. We took 50% of this trade out. So this loss here counters this. So we are still at break even. Now let's continue. So once we lose that, we go to our 15 minutes to investigate again what is going on. Now you realize that on the 15 minutes, we had this wick and then a push to the upside again. Also, our demand zone has not yet filled. Our demand zone has not yet filled. It's still what? Holding. Price has not broken through our demand yet. So we can also look for entries again. Now this is the last lower low that was formed. This is its higher high. Wait for a break of structure there. We have a break of structure. So once we have the break of structure, we'll measure 50%. That is if you don't want to miss the trade. But if you want, you can take the extreme end. Now you put below the 50%, you cover the previous lows, target 1:3. Now you hit your 1:3. Your trade is now at what? Risk free. Your stops is at break even. You've taken 50% out. We've lost this trade, so let me take it down here, black. And then we had 1:3 on this. Good. So we lost 1%. We had 3%. So we had 2% remaining. We've won another 3%. We've taken it out. So we have 6%, but we still have this trade running. Now, the question is, how do I enter more positions? So I'll just come to my 15 minutes. So on my 15 minutes, what do I see? I see this break of structure here. I see this break of structure here. After a break of structure, what do you expect? A complex pullback. Into where? Into extreme or decisional zones. Okay, then where is my extreme zones? So this is where I'll take my fib again, mark from highs to lows, wait for a pullback around this zone, and then I'll draw my demand from here to the lowest part, wait for price to get there, and then take what? Take another position. So let's see. Now see. Oh, relax. Now we took 50% out. We were stopped at break even over here. Now price has gotten to our area again. So I'll move to what? 5 minutes or 1 minute. Now, as I said, the first touch is what? Liquidity. Draw your line there. Wait for price to break that. Okay, not yet. Okay. So now you see price has what? Liquidated it. And that is what we call inducement. Price has induced that. But let's see if still we are in the Asian section. So we don't trade during the Asian section. So let's see after the Asian section. Let's see what price gives us. Okay, so now still in the Asian, still in the Asian. Now, our zone has been violated. So we go back to 15 minutes to find another zone. So now the trend has shifted what? Bearish. So now this is the highest point and we are waiting. So let's see. Because the overall good. So you see what happened over there. Price broke this structure here as if we were going what? Bearish. But then this is what we call an inducement. It induced this low as if we were going bearish, and then price went up to break another structure here. Now, what is the purpose of this bullish trend that we are seeing? This bullish trend we are seeing is just to what? Have a pullback into this extreme supply zone. Do you get it? But within our 15 minutes swing points, we have this supply zone too that we can look, because we are saying we are supposed to be reactors of the market, not predictors. So we are saying that we are predicting that price will come here and continue the trend, or price will break this and go into this extreme supply and then continue the trend. But if we say that we are predictors, but we are not supposed to predict the market, we are supposed to react. So whatever the market gives us, we'll react to it. If the market gets here and reacts and comes down, we'll sell it from there. If it breaks this and goes all the way here, we'll take trades, the buy trades, and then try to capitalize to the top. If up to now, if you get it, type 1. If you don't, type 2.
Just wait on it, bro. So far, I'll just go 1-1. I need more. I need more. I need more. Anyone else? Yeah, perfect.
Okay. So
Yeah,
let's
bro.
continue.
You can carry on, man.
Okay. So let's continue. So now the question is, I know a lot of you want to know what inducement is and then what mitigation is. We've had that questions a lot of time. And these are the liquidity models that we are coming to learn. Now, inducement is when price lies to you or lure someone to take a particular direction, but that direction is a fake direction. So break of structures and inducement are quite similar, but inducement is fake and break of structure is the real move. So we have to train ourselves to know when a particular move is a break of structure and when that move is an inducement. So let's continue. So now that we've had a break of structure here, we look into our extreme zones. So now this is invalid because we've had a break of structure to the top. So we have to look for a break of structure, a demand zone within this leg here. So the requirement still holds. So we have, there's no fair value gap here. Okay, so in actual sense, it's supposed to be from here to here, which is big. So we have the test inside. Normally, first tests are what? Liquidity. So we wait for a deep push inside. Okay, so price got to our demand. Now, the overall trend is bearish. You remember, we are in this lower high, lower low, but we were just trying to trade internally into this, which is dangerous. Now we've gotten into that. So let's go and investigate on the first test. So once we get that, move to the 5 minutes. Now look for the last lower high that broke structure. You realize that there is no lower high, so you wait for, there's no lower, a higher low, sorry. So you wait for that to form. So now you have this push to the upside. So you wait for price to break this higher low here. Now price goes ahead to form a new higher high. So you wait for price to break here. Now we've broken structure. We've broken structure. Now we pick our fib because we don't want to miss a trade. Okay, so we set our limit here. Our stops above 1:3. That is the ideal thing that we are looking for. So let's see. All right. So we've taken our 1:3. We've taken partials. We know now that we've taken partials, where are we targeting? So we'll go to the 15 minutes. And we are targeting where? The lows here. Because this is the lower high. Price pushed into extreme. We are targeting the lower low. So we've taken our 50% out. Trade is now at break even. Now we've gotten 1:7.5. We've taken another 20% out. So we have 70%. Now our stops is at break even. Let's see if we got stopped out. So we have only 30% volume running. We are not stopped out yet. Eventually we get stopped out. Now, once we get stopped out, no problem. We've already taken enough from the market. Now, this here, since this zone here didn't go ahead to break structure or didn't go ahead to break this low here and went ahead to violate this supply zone here, this supply zone becomes a smart money trap. Because the zone didn't break, this zone didn't push market enough to break this low here, that becomes a smart money trap. And so now our trend has shifted bullish. Our swing trend has shifted bullish, and this is the lowest point of that swing. So we wait patiently for now. Now we have this break of structure here. After a break of structure, what do you expect? Complex pullback. So complex pullback till when? Into extreme or decisional demand zone. So look for your decisional zone. But before you start looking for decisional zone, you should get internal shift of market structure to confirm that complex pullback has begun. So now, wait. So now we have an internal break of structure here. Guys, are you with me? If you understand it till here, type 1. If you don't, type 2.
Yeah.
Okay. So now we have this break of structure. We've had internal break of structure to what? Give us a confirmation that we are having a complex pullback. As usual, pick your fib, mark the lowest to the highest. Look for a decisional demand and an extreme demand. Now we have this push here. This is the push that brought price up. So our demand will be here. I've taught you how to find demand, so I wouldn't stress on that again. So this is our decisional demand, and then we look for our extreme demand. So the whole move started from here. So we'll find a clear demand that has good. So we'll find one here. As I said, I have been doing this for a very long time, so I know how to get it without even having my checkbox with me. Now, when price gets here, I'll investigate. When price breaks this and comes here too, I'll investigate. Now look at something. Price have had internal break of structure. What do you expect? A complex pullback. We can take advantage of that too as well. But remember, risk less on those particular counter trades. So now we have this supply that we can draw here. But remember, this is Asian high. It can be induced. This is Asian high. It can be induced. So now, you see what I said. This is Asian highs. It can be what? Induced.
Bro, can you explain one more time? Like, why do they actually get induced every time?
This is an Asian high. Asian highs and lows are liquidities. So you see,
Okay.
price broke structure as if price was going down, and that is an inducement. You break structure as if you are going down, but you know that this is an Asian high. That Asian high or Asian low never draw a demand or supply around Asian highs and lows. It will be induced. So look at this demand that we are having here. If price is to come there, it will induce it. So you draw it at somewhere lower to an inducement level. So this is an Asian section here. So if price is to come to this area, price will induce this Asian low here and mitigate this zone here from this side, and then price will go up. So this would not be holding because this Asian low, if price is to get there, price will induce that. So that is how to spot those inducements and break of structures. Now that we've had inducements and a push, another break of structure, that inducement level is also an important level here to look for demands. But bear in mind, sorry, we've not had a complex pullback into our 50% yet. So this is just a pullback. But if the bullish momentum is still strong, price will not come to this extreme or this decisional or this extreme. Remember, from here to here is still the main push. We've not had a complex pullback yet. So let's continue. So you see the momentum price brought into this. So we'll go to our 4 hour to see. Now on the 4 hour, we had this big candlestick here, supply zone here, and then ideally I will refine it so I'll not have this box there because I see a lot of momentum there. So what I'll do is I'll go to my 15 minutes again. I'm expecting price to get into this, but within any region here, I expect a pullback. And I'll never take a trade until I get what? A break of structure again to confirm myself. So now, price broke here, came down. This becomes my swing high. This becomes my swing low for the one that is going on now. So price keeps going up. All right. You see what price did over there? Induce the Asian low, induce the Asian high. So now, see, you see what it did? Induced Asian low over here, went up to induce Asian high, came down to induce Asian low, coming, came down to induce Asian low, but the trend is still what? Bullish, as I said. So we are still waiting for price to get into extreme. Now,
And bro, while you wait for that, hold on. While you wait for price to get to your demand and supply zone, do you just wait the whole trade?
because I'm not getting any, listen, I'm not getting any trades. It's not I'm waiting. I
Okay.
marked this, price never got there. I marked this, price never got there. I marked this, price never got there. Within this, I can still mark. But then the truth is, the bullish momentum is very solid. So price will keep on going up. And you
Yeah.
keep on missing trades. So now I have this here, relative equal lows, a form of liquidity for the demand below, just waiting. Now we have this Asian section coming in again. We mitigated at Asian section. There's a high probability that this demand will not hold because this Asian section, low or high, one of them has to be induced. So price induces the high. You see what it did? Induce the high, broke this. So you see why some of your demands don't hold because you don't know where your Asian highs and lows are. So now the trend has shifted bearish now because we broke structure here. Once we break structure, mark your high, ultimate high, which is this high was bigger than this, yes. So from the highest point, uh-oh, to your lowest point, find your decisional and what extreme zones. So our decisional zones will be around here. As I said, I've teach you how to draw demand and supply zones, so I wouldn't emphasize on that again. This is decisional, this is extreme. This is extreme. Now we'll delete our fib and now wait for price to get there. Also, look at something. We had this internal break of structure here. We formed a lower high, lower low, lower high, lower low. So this will become internally. Uh, this will become internally. Melvin, how many people are in the live section now?
I think 10 altogether.
Okay. So this is our internal section. We can also look for that. So this is internally, this is our extreme zone. And we'd wait for price to get there and investigate. So price gets to our extreme zone. Move to our 5 minutes. You wait for a break of structure here. Price has violated that. So internally we switch bullish, right? So now this doesn't hold. This doesn't hold. So now let's see if our decisional demand supply will hold. Now wait. Price gets there. We move towards our 5 minutes again. Now let's delete this. So now this becomes the low. Body close below. Pick the fib from lowest point to here. Buys sell stops above 1:3. Now you know this, we will not keep our order till these Asian sections because we know what the Asian section can cost. So once we get into the Asian section, we delete the order. Now this zone is still valid because as I said, normally the first touch are what? Liquidities. So now we wait for an internal break of structure here. So now we have internal break of structure. Forex, take the trade, 10 pips, 1:3. Okay, so we are stopped out. Go back to your 15 minutes. This zone is no more holding. The sectional is no more holding. So we are looking for extreme. Once price reach our extreme, move towards 5 minutes. Remember, the extreme zones are the high probability zones. Okay, so there is no clear leg. Go to 1 minute to see if you get a clear leg. Okay, then we get this low here. So now we have, oh wait, we have this high, low, swing points. Take it here, steps above. So those who say smart money concept is swing trading, we have a 30 pip stop loss in this case. So I wouldn't take a particular trade like that. So let's see if we get mitigated. Okay, so we've hit our take profit 1:3. Guys, are you guys seeing like the way the structure works? Like the whole top down thing about this? If you get it so here, type 1. If you don't, type 2. If you get it, type 1. If you don't, type 2.
Hasim, you can find the indicator session, bro. Just search up
Just
Ada
search
session, bro. You'll
Asian
just find it.
section. Yes, that's all. So now we are up 1:3. Okay, not yet. We are not up 1:3 yet. So let's see if we get our 1:3. Okay, so now we are up 1:3. Trades at break even. Netflix and chill. Did we get fucked? No. Now you know what you are doing. This is the range. So you are targeting what? Here.
I have a question one.
Someone has a question.
But in here in supply zone, we need to first liquidate one echelon. Yes.
Now, did you hear what he said?
Bro, can you speak a bit louder, please? Hold on, let me try it. You say that again, bro?
But in here, at first us we need our one echelon in supply zone, yeah. But you take the entry without echelon.
I didn't quite get you, man. Can you just type in the chat if you can, please?
Yeah.
Because I feel like my mic is. Oh,
Type it in the chat.
my
So that we,
laptop's kind of bugging out, bro. I can't even hear anyone speak.
or the fellow Indian people, you can try to translate it for us in the chat. Like if someone understand what he's saying, he should.
Hey, yo, what you trying to say, bro? This guy, bro, being racist. Bro, I'm gonna kill you, fam. No, I'm joking. Bro, this call's been so long, man.
Yeah.
Yeah, exactly, bro. Some Indian guy himself didn't get it himself. He said, I don't get it too, bro. That's funny.
Maybe is he typing in the chat or we should continue? Is he
No,
typing?
I don't think it is, bro.
Okay,
Yo,
let's
bro,
continue.
can you just hold on, what's his name again? I forgot. What's his name? I think I can't even pronounce it. Yeah. Bro, if you got any question, just type in the chat, man. Or you can ask one more time.
Yeah. So let's continue whilst he types. So we are still at 1:3. We've taken our partials. We are waiting for 1:7 to knock. Okay, fire, 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 fire.
No, hold on. The time you enter a trade, yeah, is the
Yep.
first hour of London and the second hour of New
Oh,
York.
they were asking. So yes, you see when I entered the trade, it was second hour of New York, which is 2 p.m. New York time, which is there.
Yep.
So we enter the trade first hour of London, second hour of New York. Write it down. Let me just go to the 1 hour and be fast over there. Or the 4 hour. So eventually we hit past our 7 hour. Yes. Let me show it here so that you guys can see it on the hours. Guys, so we've had our 7 hour here. Now we know price is supposed to what? Continue the main push. You see the 4 hour, we had this complex pullback into extreme supply, but price never got there. Price came all the way to break internal structures. So now we are targeting this demand zone here. But then the first target will be here to clear these before we continue. Let's continue. And that is where price is as at now. So guys, we had this, let's see this. We had this almost 8 hour, and then we had other trades in the other. Let me just, we had like 20 something hour. I wouldn't cap about that. 7 plus 3 plus 7. Yes, so yes, this is where we'll end the lesson. If you have any question, please ask me. If you understand anything that I said, type 1 in the Discord group. If you don't, type 2. Fire, 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 fire. Easy,
Let's
easy,
get it,
easy,
boy.
easy,
That was a long ass session, man. I'll be real.
easy. So
Alright,
now,
make sure everyone's gonna hop on the call tomorrow, pre-London.
so
We're
pre-London,
gonna be taking a live feed if it's actually gonna line up,
yeah.
like
So
usual.
I'll do my analysis and then I'll post it in the trade idea group. So you
W
guys
boys.
can mark your structures like mine, and then let's get the bag next week.
Yes, sir.